We're the leading lithium project development company and project to be able to move to that next phase. No one else can say they're producing and selling their product on more than lab scale volumes. So, we're pretty confident that we'll get the funding and we'll be able to move forward.
Deals are happening out there. I don't think COVID's necessarily impacting people's ability to fund. So I'm intrigued as to what they're nervous about, what's holding them back from, pressing the button. Welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. It helps us try and understand what you're thinking, what questions you'd like us to ask the company, and indeed what you think about the company. If you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Jerko Zuvela, who is the MD of Argosy Minerals. They're an ASX listed lithium player. They have their asset in Argentina. They've just had approval for their pilot plant to be constructed, although they are missing the money. They've been in discussions since before we last spoke to them in December, and so far have not managed to secure that. The lithium market is in a downturn. We ask why Mitsubishi, their offtake partner, hasn't stepped in. He answers us. We discuss a lot of other topics. Take a look in the description below. Anything interests you in particular, you can click on that timestamp and that'll take you to that part of the video. In the meantime, enjoy what Jerko has to say. Hey Jerko, how are you, sir?
Very good, thanks. Thanks for having me today.
Looking very dark in that room. Where you holed up in a bunker somewhere?
Yeah, we're bunkering down here in Perth. It's a beautiful sunny day actually today. So if you called me a bit earlier, you would have seen all the sunlight.
No, I'm just bitter. I'm just bitter, Jerko. That's all.
You guys should be having sun over there now, shouldn't you?
I'll give it another month or two. Yeah, we'll get our 2 weeks of sunshine. It'll be fine. Hey, right. So let's kick off with the 1 minute summary for people new to this, and then we'll pick it up from there.
Argosy Minerals, our Corpo project is the Rincon Lithium Project in Argentina. It's a brine project, and we've been able to be very successful over the last few years, and predominantly in the last sort of 12 months, where we've built a pilot plant, industrial scale pilot plant, producing battery quality lithium carbonate and providing it into the cathode industry, which is obviously all about feeding into batteries and electric vehicles. And we think we're one of the leading proponents of lithium project developers. And we're hopeful that we can continue our project development via sourcing new funding in the short term and continuing to develop the Rincon Lithium Project to a commercial scale.
Okay. COVID-19, big impact in the mining world. Obviously, Argentina pretty quick to shut down everything. Are you able to do anything since we spoke in December? Have you been? I mean, obviously, I think it was maybe early December. So, what's been happening in country?
Yeah, up until probably mid to late March, everything was sort of going pretty well. We received our permits to build a 2,000 tonne per annum plant. We'd been in production at our industrial scale pilot plant, ready to deliver the product to our sales customer. Unfortunately, on about the 20th of March, the government enacted the measures, which slowed things down for us, unfortunately, just due to the fact that government departments, where we need to get the export documents closed down. That sort of has started slowly opening up again now, so we're back on the case, and we're obviously hopeful that we can carry that out in the short term over the next week or two. But Argentina is still effectively in lockdown. There is some essentials activities that can be done. Mining production is one of them, so there is ways we can go about doing work as required. But I guess from our perspective, we do have a lot of plant operators and people that are travelling. So, we're probably just maintaining our quarantine measures at the moment, just purely to maintain the health and safety of all our employees on the ground in Argentina.
Okay, last time we spoke, we talked about the pilot plant. Okay, you've got your approvals now, which is great, but you haven't been able to finance it. So have you been able to move that along any, or are you still in discussion? Have you got a solution anytime soon?
Yeah, we were making good progress through to mid-March. We were speaking to various groups, obviously end users through Asia, mainly Japan and Korea. We were speaking to some European groups, and we've probably got a lot of traction out of the European groups more recently, and that's, I guess, due to the fact that Europe seems to be pushing the EV path and the clean energy path a lot more than perhaps other parts of the world. So we're making some good progress there. Obviously, we're looking for a funding solution that is aligned with the company and our shareholders, and obviously that probably signifies that we're looking more for a debt sort of funding package, which again we're sort of working on. Again, probably our shareholders are probably getting a bit frustrated with me to say that we're continuing to progress, but I think if COVID hadn't come in mid-March, we might have been there or thereabouts by about now. We are hopefully going to restart with those groups soon, because they have been out of action for the last 6 weeks with lockdowns in Central Europe. They haven't been able to go to their offices and so forth, so it's very difficult to do any work. Same as our sort of Japanese and Korean counterparts. The Japanese are in lockdown again now. Our main customer, Mitsubishi, they're all working from home and very limited in what they can do. So, we're hopeful, and like I said, our shareholders probably won't appreciate that, but, we are progressing, and we think now with restrictions easing in Europe, we might be able to continue progressing there, and hopefully in Korea and Japan we can continue once they're sort of eased off a little bit. But I'm hopeful, and I think, once we see the back end of this virus and pandemic, and we see how sort of the supply-demand equation pans out, given what's happened in other operations, we think we're the leading lithium project development company and project to be able to move to that next phase. So that's obviously puts us in good stead. Like I said, we've got our industrial scale pilot plant producing. No one else can say they're producing and selling their product on commercials, or not commercial volumes, but on more than lab scale volumes. So we think we're ahead of the pack there, and I think that's been appreciated by the groups we've been speaking to. But saying that, obviously the hard part is convincing groups to provide those funds, because they see the lithium market is in a little bit of a slump at the moment. Lithium prices are still sort of low, and it's still hard going. But we're hopeful. We got to be hopeful, and we are, and we're very positive. We think our project, like I said, is the leading development project bar none. And with a bit more time, I think we'll get there, and then we'll continue. We have had some offers that probably haven't aligned with our interests, but again, they're good backups. So we're pretty confident that we'll get the funding, and we'll be able to move forward.
Okay,
in the short term.
Let me understand if I understand the argument there. Either they're not funding it because it's of COVID-19 impacting their ability to work, or they're not funding it because they think lithium's in a slump and they're waiting to see what that does to the marketplace, right? Because deals are happening out there. I don't think COVID's necessarily impacting people's ability to fund. So I'm intrigued as to what they're nervous about, what's holding them back from pressing the button, because there's lots of conversation and dialogue around the psychology of what COVID-19 is going to do globally in terms of consumer buying behavior, and the EV revolution as such potentially may suffer. People may delay purchases of brand new cars because they feel they've never been through something as serious as this. They've never been as damaged as they have been financially as this. Do you think that whole conversation around the psychological buying behavior is going to damage your industry, the industry that you want to feed into, whichever ecosystem you get into, whether you go the Chinese battery ecosystem or the European? Is that going to impact your ability to get financed anytime soon?
Listen, I'm sure it will have an impact. How much of an impact, that's the question. And just sort of to your point about, things are getting financed, sure, in other sectors, but no one in lithium has been financed for quite a while to build a new project. So that's I think a big differentiation. In terms of which one of the two, listen, I think the traditional sources of funding for lithium developers was impacted by I guess, lithium prices and the slump in the lithium sector. But like I said, some of these newer groups that we've been speaking with, and especially the Europeans, they've been more proactive and probably haven't looked at it from that angle as much as the positive of moving forward under this, this clean energy, EV, battery sort of sector. And that's probably been impacted by COVID, because that's sort of something new to us. We haven't really targeted that market previously, and that sort of was something this year. And like I said, unfortunately, that's sort of been impacted by that. So there is various groups. Some of the Japanese groups, albeit that they have moved reasonably slowly, but they were still moving forward. And sure, it might not be an immediate outcome with them, but like I said, they've been impacted by COVID measures as well. So listen, it's probably an easy answer to say a little bit of both, but we think probably where we will get our funding, it's probably been impacted by COVID, given that, we've probably made the quickest or the fastest progress we have made has been with those guys in more recent times, following the announcement of our approvals for building the next stage plant.
Remind me again why Mitsubishi aren't financing you.
Yeah, that's a tough one. I'm not quite sure of that myself, but obviously they're an international conglomerate. They're the biggest by far of the conglomerates in Japan. And and I guess words from their mouths is, we don't fund greenfields new projects, we fund expansion and brownfields projects. And they don't like taking the risk of getting in early doors. And given we're not even moving to the full commercial scale, that's a small scale investment is probably just as much work for them as the full scale investment that we need. And I think the same dynamics that I've mentioned before in terms of the lithium markets. That's causing them concern, because any investment, you want a return on that. And, while lithium prices are low, and that's probably why most lithium or all lithium companies, the ones that are able to move to that next phase of development, have been restricted because, the price at the moment is not feasible to bring new projects online. It's, $7,000 to $9,000 per tonne of sales price, is marginal probably for, to be able to service debt and bring new projects online due to the capex requirements. So that's been the challenge, and that's why we've taken this interim step, low capex, but as we've been told by a few others, 200 million or 15 million is, in the same category of review for these groups. So, at the end of the day, you probably need to do the same amount of work for both steps, but we still think it's, as we've been told by these groups, it is a less or a better approach to de-risking the project by taking this interim step. So why they haven't, it's a tough one to answer, but, I understand, it is difficult for them to press a button as well, given, the things we just talked about.
How much cash have you got?
As of the last quarter, we had just over $5.1 million Australian, which sort of sees us for about six or seven quarters of current financing. And if we do need to, slow down a little bit, obviously that will make us last longer, but we're very confident that, well and truly before that time, we'll have secured the capex finance to go to the next stage. So, again, we're not in a situation where we're desperate for cash at all.
Okay, you're confident that you'll secure financing, but what needs to happen to the lithium market for you, for the people you're talking to be able to offer you the money? Because it's been in a slump for a while.
Yeah, and I think, to have, rather than one or two groups that are serious, to have 6 or 7 groups to have options, you need that lithium price to go up. People need to understand that, that the China spot price is not the real price of lithium. But saying that, to get an established customer to buy your product, you need to be an established producer. So you do need to be able to make your project work at that China spot price, which is, the part that's down at that $7,000 or $8,000 a tonne. But the established customers are paying $8,000 to $9,000 to $10,000 a tonne for lithium carbonate. So if you can get an established customer, you're up and running, because your numbers work, your models work, your financial models can work. But if they're going to use the base case scenario, the Chinese spot price, it makes it more difficult. So you really do need, it really is purely based on lithium price. And the secondary part to that is understanding the mechanics behind that, because it's not a one price fits all. There is various prices for various products across this industry. Various customers are paying the producers different prices. We were in Japan late last year, and we came across some small scale cathode manufacturers that were paying well above market price. And if you can get one of them as a customer, then there's no problem. But they're the ones that aren't going to fund you. So it's a bit of a chicken egg. Do you lock in your offtake before you get funding, or do you get the funding and then work on the offtake? So we're trying to navigate around all that. And if lithium prices were higher, it'd be a lot easier with a lot more options for us. So ideally, we'd like that. Okay,
so if let's talk about that hypothesis that if buying behavior does change and the demand for electric vehicle cars does not ramp up as quickly as it perhaps may have done pre-COVID, decision making is going to slow down as a result. Are you at all nervous that you see a prolonged slump in lithium price, and you are going to have to go back and talk to, you mentioned earlier, there are some offers on the table which are not necessarily what at a price that you think is right for you or your shareholders? Are you nervous that you may have to go back cap in hand and say, well, actually, maybe we can talk now or need to talk now?
Yeah, listen, if you'd asked me that question a month ago, I'd say, I think we're pretty good with the options that we've got on the table, and they'll come through. But like you said, with this, this pandemic, we're not sure what the thinking is, or what that thinking may end up when they're ready to, when we're out of this. So sure, but what we're doing behind the scenes is making sure that these secondary options are as palatable to us as possible. So, rather than taking those discussions to an advanced level now, given we think we've got the better options on the table, it just means we need to go and negotiate with those groups to try to find that happy medium where we're happy and they're happy. So it is possible. The money, I think, is out there. It's just ensuring that it works for both parties. The negotiated outcomes.
Okay, I want to know what's going on in your head at the moment, because you and the board must have different strategies that you're looking for, because the market's changing and evolving. You don't know, quite frankly, what it's going to look like next week, let alone at the end of the year. So what are the options? You talked there about going and maybe getting an offtake in place, but obviously that's going to reduce the potential value that you can accrete if you do things the way you want to do them. So what are the different options that you've got on the table? Because there's going to be, you need to allow for all possibilities. So
absolutely.
How are you mitigating risk?
Mitigating risk by speaking to all those various options and groups associated with those options. And we think, the primary option is, like I said, primarily a debt funding package. And there are groups that can provide that. So obviously we go down that path. But there is groups that want to associate funding with offtake. So you can work around, perhaps prepayments or some sort of debt arrangements. And things that they're probably more looking for, which is equity and, project involvement. So they're the tricky ones. And then obviously you've got other investor groups that are more, in the moment and want to ensure that, it's a win-win or, a strong win for them in the short term rather than the longer term. And obviously to build a project, you need to be focused on the longer term. So we need to be mindful across all those options. Obviously the preference is those groups that want to join us and go through the stages of building this project. But if you can't do that, like I said, you got to go with those other options, and maybe the quick fix that isn't ideal, but at least it keeps your project moving forward. And we've seen some of that successful. You look at some of the companies that have taken that stance, and probably more so in the spodumene market, which has probably been impacted a lot more than what the brine, given we produce an end chemical product. But some of our peers in that regard have been able to get that short-term funding and progress and then refinance. And unfortunately, some haven't been able to do that and have fallen over. Obviously, we don't want to be in that category, and that's where the risk mitigation is, ensuring that we don't accept something that is going to end us up in a position where we're out of business.
So what is the best worst case scenario or the worst best case scenario for you, and what does that mean for you in terms of how would that impact you in terms of your decision making going forward?
Yeah, listen, I think the two are different, the worst best case and the best worst case. They might be sort of close by, but we're looking at those options that don't quite suit us, which is, as I mentioned, these groups that are more short-term thinking. But again, maybe I'm overly optimistic, but I honestly think that we'll get one of those options that are preferable for us. And it's just what that looks like, whether it's a funding group that provides the funding package and leaves you to go and deal with the offtake with the
But give me some numbers.
Users.
Jerko, give me some numbers here, because we're kind of flailing around with describing what ifs, but give me some numbers of what is it that you're looking for? Funding for what, $15 million to get your plant up and running, and a bit of G&A presumably,
Yep.
Or what does it look like?
Yeah, no, that's exactly the package we're talking about. $15 to $20 million US to bring this project into operation, and that covers the capex and working capital, and that's exactly what we're looking for. So it's a mix of how much we've given the financial models to some of these groups. We know how much we can service on the debt side of things, but again, that comes back to sales price. So depending on the sales price, it will determine how much of that component we can take as debt, and how much we might need to consider as perhaps equity or other mechanism to bring the remainder of that money in. But we think a good proportion of that can be serviced as debt. Probably $15 million can be serviced as debt, given our modelling, and that's based on some fairly low lithium price assumptions, $7,000 to $8,000 a tonne, and hopefully rising over the next few years. So we can do this as a traditional sort of debt funding package.
So if we look at the market, maybe almost flip it on its head, there's a lot of production being taken out of the market. Let's make this a positive conversation. A lot of product being taken out of the market, and the big players like Orocobre, etc. They've had to presumably. So, well, let me ask: have they completely stopped production, or have they been affected in terms of productivity?
In Argentina, Livent and Orocobre did stop for a couple of weeks, but they're back up and running now. Chile's operations didn't quite stop, but they had some supply issues. But really what stopped is or not stopped, but halted and predominantly stopped is these Australian spodumene operators, where, they've slowed right down, and that's obviously what's gone into the market in terms of, like you said, the supply dropping off. But generally the brine operators have been economic through these last 18 months of lower prices. And that's why those guys are still okay, and the spodumene guys haven't been as successful because they're more impacted by the spodumene price being as low as it has. But the chemical price, you saw Orocobre's quarterly results. They're selling product at about $5,000 a tonne. So they're still profitable at even those low prices. But obviously they don't have any debt. As soon as you've got to service some debt, then obviously you need that lithium price to be a little bit higher to be able to do that. Now, if you did it all as equity, you can operate on a similar sort of margin to Orocobre and some of it. Even SQM put a lot of some of their product into the market at the lower end as well, the lower quality stuff. But it's all about finding the right customer who's prepared to appreciate the quality of product that you can do, and that's what we've worked a lot on, and improving that quality, not only to be battery quality, but to have very low impurities and very low quantities of the specification requirements that are impacting for the cathode manufacturers. And like I said, we've had a lot of samples tested by these various groups. We've sent those results to other groups as well through Europe, Korea, and Japan, and they all come back saying, or most of them come back saying, yeah, the quality is acceptable, and we can buy that quality of product. So it's really just getting into production, finding that party that's prepared to invest in us. Once we get the funding, we can then go and work out the offtake arrangements with these groups, and hopefully sort of secure the pricing that we need to make it all fairly safe for us to move forward.
Okay, so those are all ifs and buts at the moment, okay? Do you feel vulnerable to a takeover? Because you can't get this funding in place. The conditions not in your favour. Potentially battery metal companies are going to see a dip in demand. I appreciate there's tens of billions of dollars of infrastructure being built up in ecosystems in the US and Europe and China, but even they must take pause for thought here. Are you vulnerable to a takeover or some kind of M&A activity, or would you welcome it?
Listen, we're obviously not favourable for a takeover at the moment, given where we sit in on the market cap side of things. But we're always talking with parties who are open to those sort of discussions. I don't think we're concerned about any sort of hostile takeover. I think I don't think the market's quite there yet. Our discussions with some of these larger producers and larger groups, that's not their thinking either. I think what they appreciate is this business is built around processing technology and the expertise around that, and there's not a lot of that, and you don't want to sort of go hostile because you may lose that technology. So if you're going to do anything, it's about doing it the right way. So I think that's positive in that regard. But again, if there's opportunities, obviously we'd like to be on the front foot in that regard. But if someone's bigger and better than us to come in and have a chat with us, we're always open to those discussions. But we think for our shareholders that the best value can be derived by us continuing to build a project and develop a project, because we think that's amenable. But again, if someone came with funding to offer us a package out of left field that had to consider something like that, again, if it works for the company and our shareholders, then we're open to it for sure.
Okay. Generally, what's happening in the lithium market re-M&A at the moment, or what do you see happening the rest of this year?
Listen, we're seeing a few oil and gas companies coming back into the fold. Obviously, we saw in Argentina last year, Plus Petrol take over Lithium X, I think it was, or Lithium S, sorry. So we're seeing some of those groups at the moment. We've spoken to some of them in recent times as well. So, that's interesting because that's sort of a little bit of left field. And again, like I said, you're seeing some of these European groups that, probably we hadn't had a lot to do with up until late last year or early this year, coming into the fold as well. So I think you're seeing, and you're seeing sort of, the guys upstream coming a little bit downstream to have those discussions, and not so much M&A, but, working out supply lines, supply chains, and things like that, and working closer together. And I think that's probably the way it's going to go down the track. We'll see what happens at the end of this sort of pandemic. But I think
they've got their own problems, haven't they, Jerko? I mean, oil and gas. Crikey, who'd be in that space at the moment? We were talking about.
Maybe that's why they're looking at lithium.
Maybe if they've got the cash, but what they haven't got coming in is revenue at the moment, or certainly not making any money at the moment. So again, that's another potential audience who may be looking at investing in lithium who just won't be there for 2020.
Yeah, and and you could probably escalate that to across the whole investment climate or investment sector, because people are going to be cautious with their funds at the moment. But I think again, we've seen in Australia here, Australia's stock market at its best month ever. I think we rose 25%. People are generally optimistic. Australia's probably a reasonable place at the moment to do business. Where that's coming from, I'm not, in terms of specific sectors. Obviously, the gold sector's going great guns at the moment, but I think people are positive. People need to deploy their funds somewhere. Obviously, you've got a lot of these superannuation funds that are still getting money in. They need to deploy cash. You don't want to have it in a bank, and that's probably some of the interest we've had, where some of these groups, their other option is put in a bank and get negative interest rates. So there is opportunities, and you just got to present yourself as a very good alternative to your peers and attract that. But there is things that perhaps post-pandemic, maybe weren't considered and become new opportunities. And as I said, obviously the oil and gas sector, the lithium sector is like a smidgen on the oil and gas sector. But again, it's always new opportunities, seeing what's out there. And like I said, some of these green energy funds or clean energy funds across Europe are going to be more prevalent. We've seen some funds out of the US invest in certain clean energy sectors as well. Our technology is very clean. We don't consume much energy. We can do it as solar. Our process, we take in a brine, a salty water. We put back a clean water, so there's no damage to the environment. The process is very, very clean and pure. And we think, if it is going to be a new clean energy world, given we've seen all the pollution sort of clear up over the last month or so with industry closing down, we can add further to that. We can produce effectively a clean energy and without sort of putting all the crap back into the atmosphere, which obviously we're seeing at the moment. And some of our peer companies, obviously the spodumene operators with the conversion facilities in China, that's a very dirty process, puts a lot of crap back into the atmosphere. So maybe we just need to refine where this energy comes from and how it's derived, and we think we're one of the proponents that are going to benefit from that.
I think that's a great point. There's clean energy, and then there's clean energy. It's a great point. Maybe a conversation for another day. Jerko, thank you very much for that update. I do hope things progress for you along with those conversations, and pick up the phone and let us know when they do, once we all get out of this phase that we're having to go through.
Yeah, stay well, healthy, all your team, and thanks again for your time.